Poor Misunderstood FANG Stocks by www.options-trading-education.com. It's hard to feel sorry for winners. The tech stocks that have led the market rally are considered by many to be overpriced. CNBC writes that perhaps the FANG tech stocks are not overvalued, but misunderstood. The hot FANG stocks are often cited for having lofty valuations, but their fast growth in a slow growth world may help justify their high prices. FANG's high-flying market success would make it an easy target for skittish profit takers if the stock market heads south. But if you're worried about current stock market valuations, those companies with top-line growth or sales growth more in line with share price growth may be a place to look. The more common way to consider valuation is the price-to-earnings ratio, which simply stated is the price of a stock divided by earnings per share. But CNBC took a different type of look at the FANG stocks and a number of tech companies and compared the expected year-over-year revenue growth for the June 30th quarter to stock market gains during the year ending June 30th. This is the intrinsic stock value approach pioneered by Benjamin Green in the days after the 1929 stock market crash that ushered in the Great Depression. There is an article about this concept on our sister site, ProfitableInvestingTips.com. The dictionary definition of intrinsic stock value is its fundamental value. It is obtained by adding up predicted future income of a stock and subtracting current price. It can also be seen as actual value of an equity versus its book value or market value. The concept of fundamental analysis of equities evolved from this concept. Using fundamental analysis, the intrinsic value of a stock is the expected company cash flow discounted to current dollars. Facebook, for example, is expected to show a 47% revenue increase for the current quarter compared to a year ago, and its stock price is consequently up 36%. The rationale is that this company will continue to grow and is worth a growth premium. On the other hand, Netflix is up 64%, while its expected sales growth is 31.3%. Best in a so-so market. There is a lot of money invested in the stock market. The election of Donald Trump brought in investors who believe that deregulation, tax cuts, repatriation of foreign-held corporate cash, and massive infrastructure spending would bring on stellar economic growth. All of that is stuck in the mud of White House dysfunction and Republican congressional infighting. Thus, many investors are simply looking for the best performers in a so-so market. These are the high-tech FANG stocks. As a comparison, think of the old AT&T in the early and mid-20th century. As phone lines connected all of Americans to one another, the old phone company was a sure moneymaker for decades. The time will likely come when FANG stocks taper off, but they are in a growth phase like AT&T, GM, and others experienced in the last century. For more insights and useful information about trading stocks, options, or Forex, visit www.options-trading-education.com.